Hey, what's up everyone? Today we're diving deeper into one of the most infamous sagas within the cryptocurrency space and how this current observation of the fear, uncertainty, and doubt, also known as FUD, that is happening as we speak, and it's working in tandem with the dump we are observing from the past day or two, which is the Mt. Gox issue. Now I'm going to be discussing very briefly what this means for the future of Bitcoin and how we can utilize the Elliott Wave Theory, which is what I specialize in terms of technical analysis. I'll be going in detail about that. Despite the current FUD that is happening, is Bitcoin still on track to new all-time highs? Let's discuss that. But first, for those who are not familiar, Mt. Gox was once the largest Bitcoin exchanges in the world. Now, back in 2014, it was handling over 70% of all the Bitcoin transactions, but then disaster struck. In February 2014, Mt. Gox suddenly went offline, wiped off the planet Earth, and it was soon revealed that a crazy amount, more specifically 850,000 Bitcoins, went missing, which is worth around $450 million at that time, but now could be worth billions of dollars. It's a lot of money. But the collapse of Mt. Gox sent huge shockwaves throughout the cryptocurrency community and raised serious questions about the security of these cryptocurrency exchanges. So it was later discovered that the Bitcoins had been stolen over a period of years due to a combination of theft, fraud, and mismanagement, to put it very, very shortly. So fast forwarding to today, creditors of Mt. Gox are finally on the verge of receiving their Bitcoin, totaling up to $9 billion, including Bitcoin Cash from the 2017 fork. So repayments has, according to this letter, started as we speak via the Mt. Gox website. Understandably, the market is nervous about this large influx of Bitcoin, which is why we may be seeing, without a doubt, the selling pressure from the past few days. So hints of this imminent distribution, it appeared as early as April 2024. So not sure why this is big news, especially when Mt. Gox creditors received updates for this payment process. But what is more important is that the Mt. Gox has moved significant amounts of Bitcoin, initially reportedly $2.9 billion and then reportedly up to $9.6 billion to be more precise. So in total, it's around 140,000 Bitcoins that was moved, which is about 0.675% of the total 21 million Bitcoin supply. Now, while this sounds pretty substantial, the actual impact might be less dramatic than what the most media and social media portrays. Why? Because many creditors have sold their claims over the years, often at a good discount. What does this mean? It means that hedge funds that purchase these claims have likely hedged their positions to mitigate these risks already, meaning that the market impact of them selling their Bitcoin could be neutralized by their buybacks of short positions in Bitcoin futures or ETFs. So why the sell-off now, right? So despite all of this, the market is panicking, and in my opinion, driven by short-term speculation. And more importantly, I think it's more of a lack of understanding on this subject matter. So this phenomenon is similar to other instances where rumors have caused volatility, such as false reports in August 2023 about SpaceX dumping its Bitcoin holdings. And even with real news, all of these events that I have posted here, and with all of these real news, especially with the Mt. Gox issue and these past issues, we have seen Bitcoin recover to all-time highs. Now, this pattern of fear, uncertainty, and doubt, or FUD, related to the Mt. Gox that we're seeing right now has been recurring for years, and often leading to market dips that are eventually corrected to the upside. So it's essential to remember that these events should not dictate long-term investment strategies. Indeed, though, the current sell-off extends beyond Bitcoin to other issues right now, such as, what we're seeing with Germany, the Germany issue, where in the past 2 weeks, they have sent $738 million worth of Bitcoin to exchanges. I think they recently transferred around 3,000 Bitcoins valued around $174 million. So with 1,300 BTC going to Bitstamp, Coinbase, and Kraken, could be an issue as well, right, in the short term. Now, the German government currently holds around 40,000 Bitcoin, I believe, worth approximately $2 billion. Whether they plan to sell all of this remains to be seen. Now, that also raises a question about the use of these funds. So there is speculation currently roaming around. So this significant event is taking place in a low volume market, which is kind of the key point here as well. So as we look at various exchanges like Coinbase, Bitstamp, Bitfinex, and Binance and so forth, it's clear there is minimal trading activity that's going on. That's why we have been sticking in a range for the past month, not past month, but past 3 or 4 or 5 months, right? So the lack of volume makes it easier for the market to make moves, stronger downward moves without significant support. But again, for long-term Bitcoin holders, this potential dip could be a buying opportunity, and that's what I'm going to be discussing. Now, this isn't financial advice, but the fundamental lesson remains the same. Securing your Bitcoin in cold storage rather than on exchanges. And the Mt. Gox incident was a painful but valuable lesson in the importance of self-sovereignty in cryptocurrencies. That's why we have the first Mt. Gox hack and the second Mt. Gox hacks as well that led to the 2-year bear market. And that is the biggest moral lesson we can get out of this issue at best, if anything, and I believe that we will brush right along with it. Now, what I am more interested in discussing about is how these issues can be worked with observations presented by what's known as the Elliott Wave Theory. Now, the Elliott Wave Theory is a form of technical analysis that traders use to analyze financial market cycles and forecast market trends by identifying extremes in investor psychology, highs and lows within the prices. So, according to the Elliott Wave Theory, movements follow a 5-wave pattern in the direction of the main trend, followed by a 3-wave pattern in the opposite direction known as the corrective phase. So, this cycle is known as simply the 5-3-wave pattern, which is why you all see these numbers here in this chart as well. We have 5 waves up, 5 waves up, 5 waves up, 3 waves down, 3 waves down. Now, there are different complex structures within the Elliott Wave Theory as well, but we won't go too deep into that. So if one Elliott cycle is consisted of 5 waves up, then and it's consisted of 5 waves up, that completes what is possibly known as one completed move of a larger degree or a higher degree and can continued to be worked upon to help identify a certain trend. So if you are able to identify a clear 5-wave up, you have a pretty good chance of knowing when the corrective move will happen thereafter. Because after a 5-wave move, according to the theory, is where you see the reactionary or the corrective phase and this lettered phase here. So what's important about this is that these cycles can occur at various degrees of the trend, from very long-term cycles to very short-term cycles. So that is why we create one larger degree to help kind of organize everything. So that is the interesting part of the theory. And the most important thing about this is the corrective waves that happen thereafter, known as the ABC corrective phase, because traders use the Elliott Wave Theory to identify the direction of the trend and then find entry and exit points and potential exit or potential price targets. So the theory provides guidelines such as the relationships between the different waves. For example, wave 3 is never the shortest wave. That's why you see these long waves here. And again, wave 4 does not overlap with wave 1, very simply put, and etc. There are many rules and guidelines associated with the Elliott Wave Theory alone. But the biggest thing to note is that the market works in an 8-wave cycle to complete one larger degree, or 5 waves up for one move here, and then we have a 5, 3, 5, 3, 5 to the upside that completes one larger degree eventually. So the most important thing is that the Elliott Wave Theory suggests that the market moves in predictable patterns of collective investor behavior, characterized by these series of these impulses and corrective waves, the 5s and 3s I have mentioned. So understanding these patterns can help traders anticipate future price movements and make informed trading decisions. And that's why we have this possibility of this current cycle working in tandem with the Elliott Wave Theory. So what does that mean? Now, what we have here is possibly 5 waves up into one larger of a super cycle degree. Now, these all have names associated with it depending on what Roman numeral you're in. And here, if you have a parenthesis in a Roman numeral 1, you have a super cycle degree. And then you have a 3-wave corrective move. Again, that is the completion of a wave 2. And then we have a possible 3, 4, 5. But here, what we have is possibly extension waves. Now, extension waves are what is known as you work within the wave 3 of the supercycle degree, and we create known as extensions. So we are possibly creating these extensions. Now, this is a long story, however, but right now what we're seeing is possible fractals being built with the current associated pattern that is being created by this overall trend for Bitcoin since its inception. So what that means is, due to this idea of the fractals in nature in play, we have another possible cycle degree, primary degree, intermediate degree, and then a minor degree that all works in tandem for a larger extended wave supercycle degree of a wave 3. So eventually we will finish off creating that supercycle wave 3, and that is the current goal achievement that we are looking for. But again, we don't want to be too ambitious with the Elliott Wave Theory, because that is the downfall of it, because you can create infinite nested structures. But for this current cycle degree, this is the only bullish way that we can currently count it, which is the supercycle degree being created, and we're working in the cycle, primary, and intermediate degree respectively. So what does that mean? If we zoom in further, we have a possible 1, 2, 3, 4 being created, and 5. What did I say? We need 5 waves up to create one larger degree, and that is why I feel like we are missing one leg or recipe, part of the recipe of this 5th wave that should be completing for wave 1 if we're still on track. Now, according to all of this, I have all of the bad news that have been listed within the cryptocurrency market in the history of Bitcoin, which means we have seen so many bad news, such as China banning crypto transactions from banks. We have seen China banning all ICOs. We have seen China banning all trading and mining activities related to Bitcoin. And we have also seen what you guys are probably most familiar with, the collapse of Luna and the collapse of FTX. But we have seen the strongest bull market continuing forward. So what does that mean? Does that mean that Bitcoin still has a chance to go to the upside? Absolutely. And that is why we're kind of connecting all of the observations that we have been creating along the way that works in tandem with the Elliott Wave Theory. So these fractals work in nature with it. That's why I've said if traders are able to understand these patterns, they can anticipate future price movements and make informed trading decisions based on these wave patterns. So without going too further into the types of patterns, I believe we're still in a wave 3, 4. I think that we're still missing a wave 5 to the upside for this intermediate degree. Again, with 5 waves up, we're creating 1 degree of each parent degree. So I think that that is what we're going to be looking for, and I believe that we will have that corrective phase and we can make that informed decision, because after 5 waves up, what did I say? We are looking for a corrective phase of an ABC. So that is why we have to be remaining lawful to the theory and also creating some kind of conviction based on all of these past events and seeing what kind of future events that we can create from the Elliott Wave Theory. And I believe that we are still missing one leg to the upside, that we will eventually create a 5th wave to the upside to complete this degree of the 5th wave, just like we have done in the past, creating these 5 waves to the upside for each respective degree. So that is the conclusion, and why we should be a little bit less cautious, but also more cautious in terms of why we shouldn't be scared. Hopefully that was helpful, ladies and gentlemen. And again, please make sure to take everything with a grain of salt, including my theory on how we can be utilizing these wave theory ideas, because everyone is subjective and has their right to their own ideas and their own theories. But for me, I do believe that this is all working in tandem with all of the observations we have seen with the news, such as the Mt. Gox issue that we're seeing right now, with the Germany issue that we're seeing right now. That can be all part of the plan of a possible wave 4 corrective move. Again, wave 4 corrective move of a larger degree, we're looking for an ABC to the downside, and it looks like on the shorter time frame that we are seeing an ABC corrective move to the downside for wave 4 of the smaller degree, of the minor degree here in white, and we could be looking for another 5 wave move up for wave 5, and that in itself is a larger 1, 2, 3, 4, 5. Again, 5, 3, 5, 3, 5 for a larger degree. So that was hopefully that was helpful, ladies and gentlemen. I'll see you guys in the next video. Thank you very much. If you haven't seen my past video, please make sure to go watch it. Thank you very much. I'll see you guys in the next video. Bye-bye.